This year, you paid your taxes. Whatever that number was, the government took it. Before you could say no, before you could negotiate. That same year, one of the richest men on earth paid less than 1%. Not 1% of what you paid. 1% of his income. And he didn't cheat. He didn't hide anything offshore. He just knew something you don't. There are two tax systems in America. You are living inside one of them. And by the end of this video, you'll understand exactly how the other one works. And 3 things you can do to start switching sides. Not opinions, not theory. Legal strategies. Right now, stay with me. Let's start with the number that should make you angry. The top 25 wealthiest Americans paid a true tax rate of 3.4% between 2014 and 2018. 3.4%. The average American worker paid 14%. Think about what that means. You work 40 hours a week. They own companies, stocks, real estate. You pay 4 times more of your income in taxes than they do. Jeff Bezos. In 1 year, his wealth grew by $13.9 billion. He paid $973 million in taxes. Less than 1%. And nobody broke any laws. So how does this work? Here's the mechanism, and once you see it, you can't unsee it. The U.S. tax system taxes one thing above everything else: income. Specifically, wages, the money you earn by showing up and doing work. Your employer takes taxes out before you even see the check. There's no negotiation, no delay, no choice. But here's what the wealthy figured out a long time ago. If you never earn a salary, you never trigger the highest tax rates. Bezos set his Amazon salary at $81,840 a year. Zuckerberg takes $1. Larry Page takes $1. Steve Jobs took $1 when he returned to Apple. These are some of the richest people in human history. And they pay themselves less than a schoolteacher. Because wages are taxed at up to 37%. But wealth is taxed completely differently. When their companies grow, their net worth grows, but they don't sell the stock. And here's the rule that changes everything. In America, you only pay tax when you sell. Unrealized gains are not taxed. So Bezos' wealth grows by billions. On paper. Tax bill, 0. But he still needs to live. Private jets, yachts, mansions. How does he pay for that without selling stock? He borrows against it. Banks will lend you money against assets you own as collateral, and loans are not income. Loans are not taxed. This strategy even has a name: buy, borrow, die. Buy assets, borrow against them tax-free, die and pass everything to your heirs at a stepped-up value, so the capital gains disappear entirely. Gone, legally, forever. And while you were paying 25% on your paycheck, 18 American billionaires received government stimulus checks during COVID because their reported income was low enough to qualify. The same system, 2 completely different outcomes. Now here's where this gets personal. because I'm not telling you this so you can be angry at billionaires. I'm telling you this because parts of this playbook are available to you right now. Not the yacht, not the billion-dollar loans, but the principles behind them, the exact same principles, work at any income level. And most people never find out because nobody teaches this in school. The system counts on that. Here are 3 moves. Move 1. Stop being taxed on income you don't need yet. If you have a 401k or an IRA, every dollar you put in reduces your taxable income this year. In 2026, you can contribute up to $23,500 to a 401k. If you're in the 22% tax bracket, maxing that out saves you over $5,000 in taxes this year alone. That's money the government takes from your neighbor who didn't know this rule. The wealthy defer income constantly. You can too. This is move 1. Move 2. Own something. The tax code rewards ownership above everything else. If you have any kind of side income, freelance, consulting, selling anything online, you are now a business owner. And business owners get to deduct expenses that employees cannot touch. Your home office, part of your phone bill, equipment, software, education. A vehicle used for business can qualify for up to $31,300 in deductions in 2026 under Section 179. The wealthy don't just earn money, they run it through structures that turn personal expenses into business deductions. You don't need a billion-dollar company to start doing this. You need $500 and an LLC. This is move 2. Move 3, and this one connects to something bigger. Capital gains tax on long-term investments maxes out at 20%. Income tax maxes out at 37%. That gap, 17 percentage points, is the entire foundation of how the wealthy stay wealthy. They convert income into assets. Then they let those assets grow. Stocks held over 1 year, 20% maximum tax. Bitcoin held over 1 year, 20% maximum tax. Real estate, 20% maximum tax. Your salary up to 37%. The system taxes your labor at nearly double the rate. It taxes your wealth, which means the single most powerful financial move available to an ordinary person is to start converting income into assets as early as possible. Whatever that looks like for you, index funds, real estate, Bitcoin. The vehicle matters less than the direction. Stop being purely a wage earner. Start being an owner. This is move 3. Now, let's connect everything. The tax system was not designed to be fair. It was designed by people who owned things, for people who own things. And it has worked exactly as intended for over 100 years. But the rules are public. The code is available to everyone. The difference between the people who win and the people who don't is not intelligence. It's not luck. It's knowledge. And now you have it. So here is what to do this week, not someday. This week. 1. Check your 401k contribution. If you're not at the maximum, increase it by even 1%. That's money the government doesn't get. 2. If you have any side income at all, Talk to a CPA about forming an LLC. One conversation could save you thousands per year. 3. Look at what you own versus what you earn. If everything you have is wages and a savings account, you are playing by the most expensive set of rules possible. Start moving toward ownership. Any ownership, any amount. The system isn't going to change for you. Congress hasn't closed these loopholes in decades. Because the people who write the laws are the same people who benefit from them. Which means the only person who is going to change your tax situation is you. Not your accountant, not Washington. You. The information exists. Most people never look at it. Now you have. Next video, we go inside the retirement trap that's quietly making Wall Street rich, while your 401k pretends to work for you. You won't look at your retirement account the same way again. See you there.